Understanding Benefits Packages, Part 1, an overview. So before we kind of dive into this overview, what are benefits packages? So they're also known as employee benefits or compensation packages, but essentially you'll hear about this more when you start applying for full-time roles, even some part-time roles. But benefits packages are essentially, according to Indeed.com, Indeed.com defines them as the additional methods for tangible and intangible compensation offered to employees separate from their base salary or wages. So essentially, it's everything other than that salary that you'll be receiving as a part of a job. And why is understanding benefits packages important? So I've touched on this a little bit in the very beginning, but just to kind of reiterate, there are several reasons why it's important to understand what benefits packages are. And here are just like a few. So first, it's a part of your total compensation for a job. So if you're comparing job offers or making a decision as to whether or not to take a job, it's important to kind of take all the benefits into account, and it can help make that decision. It has other monetary implications. So like the definition mentions, it's in addition to your salary, and parts of your benefits package can carry monetary value. So depending on the items in your benefits package, you may need to pay for things out of pocket, or maybe not if it is included in your benefits package. So like for instance, let's say my employer offers commuter benefits, and they pay for me to take public transportation, like they pay for that public transportation cost. So let's say I take BART from El Cerrito, like Del Norte station, to Embarcadero in San Francisco. Excuse me. So the costs, I think about like $5 each way. So that's about $10 round trip. So if there's about like 260, I think, working days in the year, that adds up pretty quickly, and that'll add up to around $2,600 for a year just to get to and from work, essentially. So without that commuter benefit, I would be paying for that on my own, out of my own pocket. So considering the additional costs or savings that stem from your benefits, it's all important to consider. And then next, it's important to know what you're agreeing to, essentially. It's always important to have a good sense of that, and so similarly, you want to make sure your needs are met, and make sure that with the additional potential costs or savings from your benefits paired with your salary, you're able to get by with the budget you're setting for yourself, or if you're going to want to have like insurance coverage for your family members, or make sure, you just want to make sure those needs can be met. So, those are things to think about. And the types of benefits your potential employer offers can also give implications that speak to the overall company. And lastly, understanding benefits packages can also help with negotiating salary. So like I mentioned, there are monetary implications of benefits. So when you assess your benefits package, you might be able to leverage what is or isn't offered to negotiate your salary. And if we go back to like the commuter benefits example, let's say the company didn't offer commuter benefits, and I know it's going to cost me $2,600 to get to and from work, I could potentially use that in making a case for an increase in my salary that's being offered by like $2,000 or $3,000 by just saying, like it'll cost me this much just to get to and from work. And since commuter benefits aren't a part of the benefits package, I was wondering if I could increase my salary to this amount. So some common benefits, usually these are the ones that will show up most often. So you have insurance, retirement plans, and paid time off, or PTO. If an employer doesn't offer insurance or retirement, there are alternatives that you can, access on your own, but paid time off is definitely one of those things that typically you won't be able to find alternatives for. And then some companies have gotten really creative with the benefits they have offered to their employees or prospective employees. Like being offered stock in a company or signing bonuses and commission or commuter benefits, like I mentioned, or even like relocation stipends and professional development opportunities, and the list really goes on. So those are all things to also keep in mind, and that's why I've included them here. So first, we're going to just chat about insurance. So health insurance is obviously super important, and I'm sure you all know this, especially now more than ever. And so if health insurance is included in your benefits package, it's important to take time to review it. And I know you might feel like rushed to make a decision, or even rush to pick a health insurance plan, but the more you know now, the easier it'll be to navigate your options when you are confronted with those decisions. So I'm not going to go too deep into health insurance, but here are just some things like just a quick overview to consider. So when you're trying to make a decision about health insurance, you want to keep these things in mind. So employer-sponsored health insurance tends to be the best option, and that's in part because employers pay a portion of the premiums. So a premium is like the amount you would pay each month. And so when you have kind of this group insurance situation that an employer-sponsored health insurance plan usually is, it tends to be a little bit more cost-effective. But there are other options, like I mentioned. So there's state or federal, like public marketplace insurance options, or private marketplace insurance. But typically you're going to get the most bang for your buck with the employer-sponsored health insurance. And the state public marketplace is like for California, it's Covered California. So you have options, but typically your employer-sponsored one is going to be the best deal overall. And then once you kind of decide on whether or not you're going to do the employer-sponsored health insurance, or if you're going to go like public or private marketplace, you should consider kind of the types of insurance plans there are. So you've probably heard these things before, and it sounds kind of like alphabet soup, but the most common types of health insurance policies are HMOs, PPOs, EPOs, or POS plans. So the kind of plan you choose will help determine how much you would be paying out of pocket, as well as like which doctors you can see. So some common differences between the plans include whether or not you have to like stay in the network of hospitals or doctors that get covered, or if you need like a referral for something to access like a specialist, like whether or not that would be covered, and of course like overall out-of-pocket costs, so how much you would be paying out of your own pocket. Excuse me. So these are all things to consider, and I know it seems really confusing, so you can always do a little bit more of your own research. And typically if you ask like HR, if you're being hired for a new job, ask them for an overview or a summary for their insurance plans. Typically they have those handy, so you can always kind of look at all of these things in summary to help you make a decision. Some health insurance plans also include an HSA, or health savings account, or FSA, which is flexible spending accounts. So that's just yet another thing to consider when you're looking at your benefits package, if health insurance is included in that. So when you're making a decision, you want to take into consideration your own medical history, or the medical history of those you will help insure. So if you have family members that you're expecting to have coverage for, considering all of that. And though you can't always predict health situations, unfortunately, you can kind of consider like any trends from the past few years with your health, or how often you would like to go to the doctor, or if you feel like you need a specialist often, or even like if you know that you need certain medications, things like that, are all important to take into account. And, you want to choose a plan that will pay for your regular and necessary care. So next is dental and vision. So dental insurance covers like issues related to the teeth and gums, as well as preventative care, so things like teeth cleanings. And it's available as a part of some medical insurance plans, or as a standalone plan policy. It's usually a lot easier to understand dental insurance than health insurance. It's a little bit less complicated. It's much more straightforward, and your policy covers, very specific things that's usually listed. So all of that, just makes more sense when you're reading through these things, as well as like the overall cost, like out-of-pocket cost, for services that are covered under dental insurance. Vision insurance will often cover routine eye like health expenses, so eye exams or like contact lens fittings, or just contact lenses in general, as well as like glasses and frames. So depending on the plan, it may cover costs of items in full or a portion, if, it just depends on the plan. So sometimes it's like a flat fee or percentage of the cost that the vision care insurance will cover. And vision is generally considered supplemental insurance, which means generally consumers buy vision insurance in addition to other medical policies. But in a job description, when you see something listed like health, dental, vision insurance, this is kind of what we're talking about there. So when considering your health insurance, and dental and vision, you want to be prepared with questions to ask HR or the hiring manager, to make sure that if you accept a position, that your needs are met, kind of like we were talking about in the beginning of this. So in general, before accepting a job, there are questions you should ask about employee benefits to ensure that your overall compensation plan is right for you and your family, if applicable. So, ask specific questions based on your needs and what's important to you, but here are also some that kind of help with navigating that conversation. So asking things like, does the employee pay for health insurance coverage? If so, how much individual coverage and or family coverage? Or is the premium deducted from my paycheck? So is that month-to-month cost for health insurance just taken out of the paycheck? And can I review a summary of health insurance plan options? So like I mentioned, that's always a good thing to ask, just so that you have an overview of the services that are covered under the health insurance plans available, as well as like costs and things like that. And then when does coverage begin? So sometimes when you switch health insurances, there's kind of a period where the insurance won't kick in right away. So all of that stuff is really important to keep in mind, because you always, of course, want to try to be insured. So knowing that information can help you plan for that period. And just a little note on the left, check out NerdWallet for more information on choosing health insurance plans. NerdWallet is a really great resource. If you just Google them, you'll find them. They have tons of articles on these types of things specifically related to costs. So they have things like articles on health insurance and such. And so I definitely encourage you to check those resources out. Next is life insurance. So not sure how many of you are familiar with life insurance, but it is something that you want to think about. I know as a young person, you might not think about life insurance, but it's important to just be aware of at least, and have this in the back of your mind, if you're not going to participate in life insurance, but life insurance is essentially a contract between an insurer and a policyholder in which the insurer guarantees payment of a death benefit to named beneficiaries when the insured passes away. So it's a little morbid and a little sad, but beneficiaries for life insurance policies is basically the people who would receive the death benefit. So it's people that if you tap into life insurance, then you would name your beneficiaries. So you would name the people you would want to receive that money. And a death benefit is the amount of money the insurance company guarantees to give those beneficiaries who you've identified in the policy. So there are two main categories for life insurance. There's term life insurance and permanent life insurance. So term life insurance covers you for a set term. So anywhere from like 5 to 30 years, typically, has a much lower premium, so a much lower month-to-month cost. And permanent life insurance is designed to cover you for as long as you pay the premiums. So universal life insurance and whole life insurance are the two types of permanent life insurance. And for life insurance policies to remain in force, the policyholder must pay a single premium upfront or pay regular premiums over time. So they have to pay like a certain amount in the very beginning, or they pay, regularly, like month to month, like they'll pay a certain amount. So life insurance is another benefit that may be offered in a benefits package. Some employers even offer like a small amount of life insurance coverage for free. I think it's known as like basic life insurance. There's really no reason not to accept the free benefit since it's free. And you may also have the option to buy like supplemental group life insurance, which generally just allows workers to buy like extra coverage if you feel like the amount that's set won't be enough to sustain your loved ones or beneficiaries. So just like an overview of the things to keep in mind. So when you're trying to make a decision about life insurance, you should compare the cost of supplemental life insurance available through your work or what you can find on your own. Like I mentioned, NerdWallet is a great resource, and they have like a comparing quotes tool on their website that you can check out if you're curious. And as a general rule, life insurance for young adults is less expensive the younger you are, so when you initially purchase it. So that's just something to keep in mind. And it's always, good to just check with your employer to see if there's any like discounts that they may have if you purchase life insurance through them. So that is life insurance. Disability insurance. So I know most folks like life insurance don't always think about disability insurance, but we're going to review this. So disability insurance pays a portion of your income if you can't work for an extended period of time due to something like illness or injury. There's like two types of disability insurance, so short-term and long-term coverage. Both will replace a portion of your monthly base salary to a certain amount while you're on disability. And employer-sponsored coverage offers disability insurance typically and may pay some or all of the cost of the premiums. So remember, premiums is that month-to-month cost. And you can buy disability insurance through the workplace as a voluntary benefit. Employees who buy coverage through employers' insurance broker at a group rate. So again, like anytime there's insurance involved and kind of there's a group rate, it'll be a little bit more cost effective typically. But an alternative to buying disability or having disability through an employer, you can always purchase it on your own if you'd like. Typically, the individual disability insurance plans offer a little bit more freedom, so you can like keep the coverage when you change your jobs, or you know, coverage stays intact as long as you pay for it versus it being a fixed number of years or what have you. So just something to keep in mind, that if, you know, the company you work for doesn't offer it, but it's something you'd want to have for yourself, then you can always buy it on your own. And then just some things to keep in mind. So you want to consider the difference between short and long-term disability insurance. Disability policies vary in how they define disability or disabled, and cost depends on a variety of factors like your income or age, health, occupation, all these things. So that's all things to keep in mind. And then remember, employer sponsored disability insurance usually pays only a portion of your base salary if you happen to have to go on disability. And so, you know, considering the supplemental coverage isn't a bad idea. And then a helpful way to think about disability insurance is just, instead of thinking of it as insurance for having a disability, think about it as having insurance for anything that could get in the way of you earning an income, because that's, you know, essentially what it is. And even things like, you know, like pregnancy or mental health issues are covered, you know, along with injuries, of course. But, you know, it's just something to keep in mind. And things happen, unfortunately. Like, I wish we could always predict the things that happen, but things happen, and I feel like disability insurance is a way to just keep peace of mind and protect yourself and those you may be caring for. So if you are the primary, like, income earning of your household, it could, you know, mean financial hardship if you don't have disability insurance. So just, again, things to keep in mind. I know when you're young, we don't typically think about these things, but it is important to at least think about it and know about it. Next is retirement. So I'm sure you guys have heard of 401k before. It's a pretty common term, but folks might not have heard of 403b, but either way, I'm gonna go over both. So 401k plans is like a retirement savings account that allows an employee to divert a portion of their salary into long-term investments. And the balance in the account is determined by the contributions made to that particular plan and the performance of those investments that are being made. And there's typically a contribution limit, so you can only contribute a certain amount, up to like a cap per year. And the investment earnings in a traditional 401k plan are not taxed until the employee withdraws that money, typically after retirement, and then the balance is in the hands of the employee. And then there's 403b, which functions very similarly to a 401k. Typically 403b are offered by employees of public schools and tax-exempt organizations like nonprofits. So again, they function very similarly, but yeah. And then it's similar, like I mentioned, it's similar to a 401k in that contributions made and performance determine the balance of the account. And earnings are not taxed until the employee withdraws money, and then there's also a cap for 403bs. So there's a thing called employer matching. So sometimes companies will have this when it comes to retirement benefits, and honestly, it kind of feels like free money. So if your employer does have this, definitely tap into it if you can. So basically, employer matching is when your employer contributes a certain amount to your retirement savings plan based on the amount of your own annual contributions. So typically, employers match a percentage of employee contributions up to a certain portion of the total salary. And you might have to work for your employer for a period of time before your company will begin this matching process. But like I mentioned, if they do have it, I definitely suggest tapping into that. And matching can happen for both 401k and 403b. So here are some examples of what matching kind of looks like in context. So example one, the first one. So let's say that the company you work for includes a 401k employer match and specifically provides a 50% match up to the first 6% you contribute. So the employer will match what you contribute as long as it's in or within the first 6% of your annual salary. So this means that, let's say you earn $50,000 per year and you contribute, the 6% of that annual salary to your 401k, which would be $3,000. So you'd be putting that $3,000 into your 401k for the year. And through matching, you'll also receive the matching contribution of $1,500 from your employer, which is added to your 401k for that same year. So the way that I got the $1,500 was that if you take 6% of $50,000, you get $3,000, right? We just discussed that. So you are contributing to yourself that $3,000 to your 401k. And in this instance, your employer will match 50% of that 6%. So that means they'll match up to half of the $3,000, which is $1,500. So in the end, for this first example, with the matching contribution and your own contribution, you would have a total of $4,500 contributed to your 401k for that year. So like I mentioned, it really feels like free money. They're giving you that $1,500 just for you yourself contributing a certain amount. So example number two, so let's say that your employer will match dollar for dollar up to 5%. So this means every dollar you put into your 401k until you reach a total of 5% of your gross pay for the year will be matched. So let's say you again earn $50,000 per year and you contribute your 5% for your 401k, which 5% of 50,000 is 2,500. Your employer will then do a dollar for dollar match, which means 100% match, right? Dollar for dollar to that 5%. So they will also contribute $2,500. So in this instance, you would be contributing, and then with the matching contribution, a total of $5,000 for the year into your 401k, so into your retirement. So again, definitely feels like free money. So if you do, are reviewing your benefits package and there is this matching option, definitely tap into it because it will obviously benefit your savings for retirement. And I know retirement feels very far away, but it's something that's important to, to save for if you can. Even if it's a little amount every year, you definitely want to try to save if you can. So more on retirement. So next is IRAs. So there are several types of IRAs. There's traditional IRAs, Roth IRAs, SEP IRAs, and simple IRAs. So the SEP IRAs are simplified employee pension IRA, and simple IRAs, which stands for Savings Incentive Match Plan for Employees, are offered by employers and can be a part of the benefits packages. So in addition to maybe the 401k or 403b, they may also offer this retirement option, this retirement savings option of an IRA. There's also traditional IRAs and Roth IRAs. So those are separate from the employers. So if per se your employer doesn't offer retirement as a part of the benefits package or just offers a 401k or 403b, then you could open a traditional or Roth IRA on your own through someone like Fidelity or Charles Schwab or somewhere on your own that's separate from the employer benefit. So similar to 401k and 403b, IRAs are an advantaged investing tool for individuals saving for retirement. And the balance depends on the amount contributed, of course, by you. And there's also a max amount that can be contributed each year, just like the 401k and the 403b. So, and then any tax liabilities and contribution limits of both the individual and the employer kind of just depends on the type of IRA. And then there are pension plans. So pension plans, I believe, are not as common anymore, but if I know like a lot of government jobs offer pension plans still, so it's still good to just know these things. So pension plan is like a retirement plan that requires an employer to make contributions to a pool of funds set aside for a worker's future benefit. So employers will contribute a certain amount over the years, and it would earn additional income based on investments. And then eventually when someone retires, they will turn over that money to the retired worker, and the retired worker would receive that money. And so there are two main types of pension plans. So there's defined benefit plans and defined contribution plans. So for the defined benefit plans, the employer guarantees that the employee receives a definite amount of money upon retirement, and the employer is liable for a specific flow of payments. So basically, if a pension plan is included in the benefits package, this particular kind of plan means that there's a set amount of money that the employee will receive when they retire, and the employer is responsible for providing that money and for providing that amount of money being distributed each month. So yeah. And then the defined contribution plans, the employer makes specific plan contributions for the worker, and the money received upon retirement depends on the plan's investment performance. So depending on how it was invested, kind of dictates the amount of money that person would receive when they retire. So again, pension plans aren't as popular anymore, I believe, but they are still a thing. And I believe a lot of government jobs still have pension plans. So again, important to keep in mind. Next is paid time off. So I'm sure many of you are familiar with PTO. But just in case you're not, paid time off is a policy that provides a bank of hours in which the employer pools like sick days, vacation days, and personal days that allows for employees to use as they need. So PTO policies kind of depend just on the company, and usually there's like the standard set number of days off that employees offer, but kind of similar to just benefits package and benefits items in general. Folks have gotten pretty creative with their PTO policies. So here are just some extra examples. So like the first one, earned PTO or accrued time off. So some companies will have it so that, you have to work a certain amount of hours to earn a certain amount of hours off. So that's like one PTO policy. Or companies may increase the vacation time with tenure. So if you work at a company for longer, they may offer you more vacation time. There's floating holidays, which I believe Microsoft does. I think it's Microsoft, but essentially they kind of have this stance where like not everyone celebrates the federal holidays that we have off. And so if you would like, you can use this floating holiday. So you would, instead of celebrating maybe like Christmas, which, most companies have off, you can use those days and put them somewhere else in your calendar where you would prefer to take them off. Some companies do unlimited vacation or unlimited sick time, which is really nice. There's also year-to-year PTO carryover. So some places will say, if, whatever you don't use, you'll have it the next year and it'll carry over. And then there's flexible PTO, which is pretty self-explanatory. So PTO, even though, like it seems pretty straightforward, there are companies that have gotten creative with it. And so deciding if a company's policy works for you, if there's, if you're comparing job offers, then, this is a good item to kind of keep in mind when you're comparing. And then just lastly, those additional benefits. So I listed a whole bunch in the beginning. And again, benefits just vary by company. And like I mentioned, companies have gotten really creative with the benefits that they've offered, but all these things are important to keep in mind. And I've said that a million times, but it's so true. And so, especially when there is monetary value, it's easier to kind of create a list of all the benefits and potential savings or costs that might contribute to that. So examples like access to a gym, if there's like a gym in the office that you have access to for free, the average cost of a gym membership is around $50 a month, which adds up to $650 a year, which is a lot, obviously. Some places will do like catered lunch or meals, and if you're working someplace like San Francisco, the average cost of a meal might even be more than $10 a day, which again adds up very quickly. So that's all money you could be saving. And some companies even have childcare, which can be very expensive. And so things like that, it all adds up. So it's important to keep in mind. And of course, like I mentioned, the monetary benefits like that have monetary value, at least it's easy to make a list and add up all of those benefits to like a very specific number. But you also want to think about what's important to you, what your needs are, and of course, like what makes you happy. So things that don't seem to have monetary value, things like professional development opportunities or like a clear pathway to promotion, those are all things that should be thought about too, even though they don't have like immediate monetary value or monetary benefit for you. So just, you want to look at, these additional benefits holistically, but of course, prioritize your needs first. So kind of on that note, you want to always make sure that you are always reviewing the entire benefits package before making any decisions. Like I said, sometimes you might feel like rushed and not have time to review everything, but again, like the more you know now, the easier it'll be to kind of assess those benefits packages. So I'm glad that you are here today. And talk it over with someone. Don't be afraid to ask questions. You can ask HR of the company you're interviewing with questions to make sure that your needs are met. And just because you have a job offer on the table, doesn't mean you have to accept it right away. I always encourage folks to take at least a day to think things over, ask the questions you want answered, and really assess whether or not the entire package of a job offer is right for you.